Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be talking about bank statement loans, and we're going to be looking at our live mortgage rates for today. Give us just a moment here to go live on all the platforms. We appreciate everybody tuning in nice and early. Got the chat there up on the screen. Go ahead and drop a comment there in the chat as you tune in. And it looks like we're live on all the platforms, so we'll go ahead and get it started here. Take the chat off the screen for now, but feel free to drop comments there. And also you can drop any questions you have in the chat, and we'd be happy to answer your questions after we go through our deep dive topic here for today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates. Then we do a deep dive into a different loan type. And today's loan type is going to be bank statement loans. We talked a little bit about it on our training last night, our loan officer training that we do at nighttime. And today we're going to be talking about it again and looking at some actual live rate examples. So with that being said, we will go ahead and check out our mortgage rates first. So Nick, if you're ready, let's go ahead and pull up today's rates and see what they are looking like. And then we'll talk about some bank statement loan options.
All right. So we will check out the rates for our various programs today. It is September 5th, just after 11 a.m. Eastern. So all of our initial rate sheets are live here, and we will compare the APR across all the different programs. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with one of our team members. We have over 300 loan officers to help you out. For the demo, as we do every day, we'll set up a basic scenario, which is going to be a standard single-family home, a $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan, 20% down payment. We'll use an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So with those settings, let's check out the rates for today. So first up is our 30-year fixed conventional primary, which is typically the option most people think of when they think of a mortgage. So conventional comes in today, 5.875 rate, amazing. Final APR 6.171, and we did have some good news for rates, so I expect these to continue to drop. And look at that, we have some more fours. If our customer doesn't qualify for conventional for any reason, the next option we typically want to present is an FHA option. FHA allows more leniency on credit issues and a much higher overall debt to income ratio as possible, but does require upfront and yearly mortgage insurance. FHA coming today, amazing 4.99, final APR 5.936. So if our customer qualifies for both, they may consider FHA. It could be a touch cheaper, but it would require that mortgage insurance. And our customers that need to use it, definitely a great option. And everybody's going to love to see those fours today. And our 30-year fixed, if the customer is eligible, these programs, amazing. Rates is 5 standard funding fee here. Definitely compare these programs. You'll notice best option. And the final USDA is a government program that's only for USDA eligible areas. Those are the rural areas of the country. So if the borrower is eligible and the property is eligible, these are good options to look at. Another 4 coming in here, 4.99. And the final APR with all the standard fees, 5.728. So if our customers shopping in those USDA areas, they're going to be typically comparing to an FHA, which is a touch cheaper than, and also a touch cheaper than the conventional option. So good option for customers looking in those areas. Now that rounds out the standard options that any bank or lender will have if our customer doesn't qualify. Unfortunately, most banks or lenders have to deny them, but that's where we love to present our 5,000 plus loan options here, starting with our non-QM alt doc for primary, which is also one of our topics for today. So if our customer doesn't qualify using 2 years of tax returns, standard documentation, needs to switch to alternative docs such as bank statements, 1099s, P&Ls, all the different types of income we have, they can use this program. Rates as low as 6.25 today for a bank statement program, usually the lowest option here. Final APR 6.566. So notice we're within a half a point of conventional to switch to using alternative docs. So great option for our customers that need to use it. And for investment properties, tons of flexibility for investments. So first up for our investment properties on non-QM, alt doc, again, bank statement or similar, 6.75 rate today, final APR 7.080. And we'll compare the investment options to the other options we have here. Remember, there are no government options, so no VA, FHA, or USDA, but we do have conventional. Rates as low as 6.5 today for a conventional investment property. Final APR 6.838. So conventional is a touch cheaper than non-QM, which is typical, but not quite cheaper than our favorite options, our DSCR. And we did have some movement today. Awesome. So DSCR stands for debt service coverage ratio. No employment information needed, no income information needed. We simply use the estimated rent to determine a DSCR ratio, cover the estimated expense cash flow. And that is preferable for the demo to all the programs that exist. Here are our 3-year rates today coming at 6.5, final APR 6.785. So good option to compare to conventional. DSCR is usually more expensive. It's still beating conventional. And we can add a 5-year prepay, beat conventional by quite a bit. Final APR 6.66 if we can a 5-year prepayment penalty. And the final investors, APR 7.0, touch higher. Investors will choose. And our final 2 options we go over every day these days, as many customers have low and still need to get some cash out, but don't want to take out that first mortgage. Typically, the only options available are HELOCs, but here we have our 30-year fixed second mortgage options for a primary home. So these are fixed rate second mortgages at lower rates than a HELOC, and definitely not variable, so preferred for most customers. Rates as low as 8.375 today to get cash out of that primary home. Final APR 8.786, and again, that's lower than HELOC. And our second mortgages for investments. And HELOCs are rare for investment properties, so these are great options. Investors can get cash out with a second mortgage, rates as low as 9.75, final APR 9.995. And these are non-QM programs, so we can use bank statements, 1099s, P&Ls, and similar. But now let's get into our topic for today, which is going to be bank statement loans. So bank statement loans is one type of loan under the general non-QM umbrella. It's probably the most popular type and the most well-known type, but obviously we have tons of options, Jose presented in the last couple of days. But bank statement is the big category. Jose will have some specifics here. Since we do the live rates, we can just go over the best option, which may not be the best option for every borrower. So Jose will show some different tips and tricks here on how we can apply bank statement loans for our self-employed borrowers.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. So continuing with our self-employed borrower options that we've been accentuating the last couple of days, bank statement is the most popular non-QM sector, comprising probably more than 50% of the loan origination in non-QM. Bank statement loans became very popular after the interest rates started creeping up in the first quarter of 2022, and have most likely picked up the slack in loan origination that the decreases that occurred in the full doc sector, agency mainly, as those borrowers, self-employed borrowers that were able to transition from agency full doc using traditional methods like tax returns to alt doc non-QM bank statement options so they could still purchase the home of their dreams. Interest rates have kept dropping in the bank statement sector as liquidity keeps increasing. Now, please do note, like what as we mentioned the last couple of days, the best option for your self-employed borrowers, if they receive a 1099, would probably be the 1099 option, because it does allow 90% of the stated income of the 1099, but that's only if you receive a 1099. Bank statement loans are simply for self-employed people that are depositing the money in a bank account. So let's go ahead and share the options that we have for you for our bank statement loan purchases and refinances. As always, 90% is the maximum LTV for our non-QM loan options. For a primary purchase, never any mortgage insurance applicable on any non-QM loans, regardless of the mortgage of the LTV. And also, at one point, I also wanted to restate, bank statement loans, all non-QM loans are always manually underwritten. So if you need that 1 year option, in this case, 12 months is what you would choose, the 12 months bank statement option, then you would only be looking back the last 12 months. So as those of you that have been following the show and have been seeing the trend that we've been, interest rate trends we've been showing in bank statement loans, can definitely see that it is a downward trend, because now look at this amazing rate. 8.375 is our lowest cost option at par. And you can buy that down all the way to 7.5% at a cost of 2.5 points for our 10% down bank statement primary option. Our highest LTV investment option is 85% LTV, 15% down. And great rates here as well. 8.374 at par, lowest cost option. And you can buy that down all the way to 6.999 at a cost of 3.25 points for our 85% LTV bank statement investment purchase. And for our lower credit score borrowers, our lowest credit score option for bank statement loans is 600. That's the same low score, whether it's investment or primary. Maximum LTV is 80% at a 600 credit score, both the same for investment or primary. In this case, I'm sharing the investment rate with you, and you will see 10.999 is our lowest cost option at par. And you can buy that down to 9.375 at a cost of 3.375 points. And for our cash out options, our highest LTV, excuse me, under a cash out refi is 80%, whether it's primary or investment. So 80% LTV, primary cash out refi, you're actually looking at a lender credit at our lowest cost option, lender credit of 0.125, and you can buy that down all the way to 7% at a cost of 2.5 points for our primary cash out and an 80% LTV. Investment cash out, great news, is also 80% LTV max. You're looking at 7.874 as our lowest cost option at par, and you can buy that down to 6.749 lowest rate option at a cost of 3.5 points. And these are amazing rates when you consider this is 80% LTV cash out bank statement, and you're looking at agency rates. And our last option here is our low credit score option, 600 credit score, again being the lowest option available. Actually, that's the lowest option available for all of our alt doc options except for DSCR, where we can actually go down to a 575. So 75% LTV is the maximum LTV for either investment or primary cash out with a 600 credit score. In this case, our investment option, lowest cost option, is 11.25% at par, cost of 0 for that rate. And you can buy that down all the way to 9.625 at a cost of 3.375. So do look to the mortgage calculator for all your bank statement loans. Do be aware also, we're showing you here the lowest rates, right? The best lowest cost option rates for bank statement loans, but all bank statement loans like non-QM loans have different guidelines. So you do have to look beyond just a rate and see what's the structure of the loan to see if there is any particular issues with the loan structure that may require a specific guideline that may have a different interest rate.
All right. Thank you, Jose. It looks like we do have a question here, so we can go ahead and bring in the question. It's not about bank statements, but it's about DSCR, which we love. So the question here is, for DSCR, what is our minimum ratio? Great question.
Oh, that's a good one. There is no minimum ratio, actually. It's all going to be based on credit score, loan to value needs of the borrower, purchase, refi, because in DSCR, we have DSCR options at 1.0 or above, and obviously they actually break those up into 1.25 and 1.5, depending on the investor. You're going to get different pricing. The higher the DSCR, the better. And in the opposite direction, we also have DSCR options for below 1.0. We like to separate those into what we call our low ratio and our no ratio DSCR options. Now, those are not official names. That's just what we like to call them, so we don't have to say 0.75 to 0.99 DSCR, which is what we would consider our low ratio, and less than 0.75 DSCR, which is what we would call our no ratio. And to break that down, debt service coverage ratio is the housing expense being divided into the gross monthly rental revenue received. So if the rental revenue does not cover the housing expense by at least a 1-to-1 ratio, then the debt service coverage ratio is below 1. Below 1.0. So keep in mind, then there are no ratio option where it's less than 0.75. Theoretically, there is no minimum. It says below 0.75. There's going to be a lease or a 1007, depending on the loan, or maybe short-term rental, whatever type of income type that you're using for the debt service coverage ratio. And then there's going to be a debt service coverage ratio, and depending which one you fall under is the guidelines, but there is no minimum, which is the beautiful thing. And I believe on a purchase on the no ratio, we can go up to 75% LTV.
All right. Thank you. Thank you for the question. Okay, let's go ahead and wrap it up then. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we'll be back tomorrow.